jointly organized by Singapore Stock Exchange and Equities Tracker. And in this session, our speaker will sharing on the entry and exit strategy for China and Hong Kong markets. Now, every session have Q&A panel on the right of your screen. Please submit your question if you have any. And by the way, the presentation are strictly to the views of the speaker only. And we have Alvin Li, Director of UBS, and Con Hao, founder of Weipedia. Now we have Alvin to share with us first, and over to you, Alvin.
Hello. Hi, everyone. Good morning. My name is Alvin Li. So glad to be here today to share with you a product that I think you probably may have heard of, but I think my presentation today is to share with you the fact that UBS is actually issuing this product as a new joiner of an issuer in the market. So quick introduction about myself and the company. My name is Alvin Li. I am responsible for listed distribution sales of Asia Pacific of UBS. And I'm responsible for product development and also sales and marketing of actually Hong Kong's warrants and CBBCs, as well as the daily leverage certificates on the SGX. So today I would like to share with you this daily leverage certificate. I think you probably have heard of it, or some of you probably have been using it to get a short-term leverage return of the underlying stocks or indices. And so I think, first of all, I would like to give you a quick introduction of, for those of you who haven't heard of it, or for those of you who are not so familiar with it yet, I would like to introduce the product to you. And also, the fact that actually, prior to UBS, there has been only one issuer in the market. So I think what I would like to point out is that issuer can also make a difference in your investment return, because issuer is responsible for the market making of the product. Okay, so without further ado, let me just quickly. Okay, so this is the disclaimer about I'll just need to show it for a couple of seconds. All right. Okay, so daily leverage certificate, DLC, right? So I think actually from the name you probably already can guess what it is about, right? So first of all the DLCs are listed on the SGX, as in every DLC has an underlying asset, right? And so it can be a stock or index, or in the future. What we are also trying to explore with the SGX is for DLC to be linked to other underlying assets or other underlying assets class as well. For example, like commodities, right? This is something that we hope to be able to achieve in the near future. But at the moment, all the DLCs on the SGX are linked to either stocks or index. So stocks can be Hong Kong stock, can be a Singapore stocks, and at the moment for UBS, our product suite has Hong Kong stocks at the moment. We probably will expand to Singapore stocks soon, but at the moment it's just Hong Kong stocks. Yeah, before I talk about UBS, let me just focus on what the product is about. And after my session, Con Hao will share his view on some of the Hong Kong stocks, and then hopefully after the session, if you have any like a short-term view on any of these Hong Kong stocks, you can think about using a long or short DLC to express the bullish or bearish view. All right. So first of all, daily in the name actually implies that the leverage is fixed on a daily basis. So the leverage reflected on a daily basis. What does that mean, right? So DLC has a leverage. So meaning that, for example, let's say today, if you look at the, say, Tencent, the Hong Kong stock, if a Tencent is up by 1% daily movement, this is talking about Tencent going up by 1% compared to its previous day close, right? So if Tencent today is up by 1%, for every 1% up in Tencent, the DLC should be up by 5%. for those 5 times DLC. At the moment, all the stocks DLCs on the SGX are 5 times leverage. So if you see Tencent is up by 1%, you can expect that the long DLC to be up by roughly 5%. So this is how trivial, how easy the relationship is. And the leverage, as you can see, can be 5 or 7 times. 7 times is actually on index only at the moment. So for Hang Seng Index, because Hang Seng Index usually the volatility is less, right? Because it has all the different member stocks instead of just a one single stock. So for index, we are able to issue product of a high leverage, but then for stocks, it's only 5 times at the moment. And so the leverage, actually the L actually stands for either long or short. So you can find 2 types of DLC, either long or short DLC. So for short DLC, obviously, if the Tencent today is actually down by 1%, you can expect the 5 times short DLC to be up by 5%. And if Tencent today is actually down by 2, then the 5 times short DLC will be up by 10%, as simple as that. And lastly, certificate means that the DLCs are, first of all, as a certificate, it actually means the DLC is issued by issuer, which is usually an investment bank like us, UBS. And the issuer actually also has an obligation to provide continuous bid and offer in the market. So even if a DLC is say brand new, newly issued by issuer, and then so only the issuer has the so-called inventory to quote buy and sell quotes, and we have the obligation to quote continuously in the market. So even if no others are trading with you, you can trade with us, and then if the stock actually goes up after that, the long DLC has to go up according to the formula, and then you will be able to sell back to the issuer. So that's also why we always emphasize that the on-screen turnover of a DLC is of course is a good reference, but it's actually not crucial for you to decide whether this DLC is good to invest, because the issuer always have an obligation to quote. When I say always, I mean it's when the underlying asset is trading. So obviously, because Hong Kong stock only trade up to 4 p.m. and the Singapore stocks up to 5 p.m. So obviously, from 4 p.m. to 5 p.m. there will be no quote on the Hong Kong stocks related DLC. But then, so long as the Hong Kong Stock Exchange is open, the Hong Kong underlying assets DLCs on the SGX, we have the obligation to quote. Okay, so that's how certificate. That's what certificate means, and so this is the current product range. As you can see, to be honest, we don't have like too many products yet at the moment, because we actually only started issuing DLC in the mid of February. So up to now, it's only 1.5 months. And we are working hard to introduce our second batch of products in the market, which I think has more than 25 products on top of this 8 products that you can see on screen. So and so you can see at the moment we have a coverage on 4 Hong Kong stocks and 1 index. So the 4 Hong Kong stocks, namely Tencent, Meituan, Alibaba, and BYD, and then the index is obviously the Hong Kong Hang Seng Index. And the leverage, as you can see, 5 times on stocks, 7 times on the index. And you may wonder why, okay, Tencent we have long short, BYD we have long short. How come Meituan and Baba, the short is not there, right? It's blank. It's because this is exactly something that I would like to sort of introduce to you, or also to explain to you what actually happened about 2 weeks ago. Because for those of you who trade Hong Kong stocks, I'm sure you still remember about 2 weeks ago when there was rumors about those US listed ADRs that may be delisted. because of the regulations and things. And then that actually made the Hang Seng Index together with all the ADRs related Hong Kong stocks actually plunged about 2 weeks ago. And then Hang Seng Index, there were 2 days where Hang Seng Index were down by more than 1,000 points each day, and that before rebounding more than 1,000 points. So that was a crazy week. Hang Seng on Monday down by more than 1,000, Tuesday down by more than 1,000, and then Wednesday back up by more than 1,000, and then Thursday back up by another 1,000. So that was a crazy week, and that's actually has triggered a what's called airbag mechanism on some of the short DLCs. Okay, and this is something that I would like to explain to you in the remaining time of my session. All right, but before that, I think after today's session, whenever you go to trade DLC, probably you, instead of just the underlying terms, right, you can also take a look at the issuer behind the DLC. So for example, our Tencent 5 times long, as you can see on the bottom of the screen, TSGW is the taker of the DLC, and then the whole name, Tencent 5 times long, UB. So this UB tells you that the UBS is the issuer of this particular DLC. So the market maker will be UBS. And so if you say sort of believe in UBS market making capability more than some other issuers, then probably you want to pay attention to this part too. And just a very quick sort of point to add to that is the reason why we focus on Hong Kong stocks at the moment is because of the fact that UBS is actually the #1 warrants and CBBCs issuer in the Hong Kong warrants and CBBCs market just last year. So our market share was #1 last year, and this actually allow us to have a better foundation to market make on all the Hong Kong stocks related products. So it allows a better synergy for us to quote a tighter spread on our products, no matter it is listed on the Hong Kong Exchange or SGX, right? So this is something that I would like to highlight to you. And okay, so one more thing before I go to the airbag is that if you look at, for example, our product suite, you can see that the Meituan long right now is trading at around 0.005. Okay, so it's just half a cent. Okay, some of the investors may think, oh wow, this looks very nice, right? It's a very cheap product for me to express 5 times long view on Meituan. Okay, but I think we don't have that many products left. Actually, Meituan long, we only have this product, but I still want to tell you to avoid this product. We cannot delist the product because the product has got some investor holding, but we still want to highlight the fact that as a DLC gets too cheap, the sensitivity of the DLC can get very, very low, and the bid and offer spread, even if the market maker is quoting the tighter spread, which is 1 tick in this case, is still a huge spread. Because when we look at spread, we should look at the percentage of the spread, right? Sorry. So what's the percentage of the bid-ask spread in this case? Is 0.001, right? 1/10 of a cent, 1 tick. But this 1 tick is actually 20% of the DLC, because the DLC is only at the half a cent. And what's meant by 20% of bid-ask spread? It means that because it's a 5 times DLC, right? In order for the DLC to move by 20%, you need Meituan, the underlying stock, to go up by 4% for you to just break even, right? So if, say, at the moment is 0.4 cent, 0.5 cent bid and offer, and then Meituan goes up by 4%, it's not, it doesn't happen every day, right? For Meituan to go up by 4%. And even if it does, the bid and offer will both go up by just 1 tick, and then the bid and offer will become 0.5 cent, 0.6 cent. And in this case, you will be able to just break even, right? It's obviously not good, right, as a trading product. So that's why I would like to highlight the fact that we should try to avoid DLCs that are too cheap, because as a DLC gets cheap, the bid and offer spread will become huge, even if the market maker quotes the tightest spread possible. Okay, so after looking at a sort of a, like a not so good product, let's focus back to some, I would say, like normal products, right? So this is the 10-cent long DLC. Bid and offer spread 2 ticks. 2 ticks is 0.2 cents. And in this case, this 0.2 cents is just 1.3% of the DLC spread, which means that you only need 0.26, 26 pips change in the 10 cent to move this DLC by 1 tick. And for you to be able to make 1 tick profit, you will need 10 cent to move by twice this amount, which is about 50 pips. 50 pips in 10 cent is around $2 in 10 cent. And every day, 10 cent actually moves, usually fluctuates from $10 to $25. So what does that mean? That means that to trade this, if you're trading this DLC every day, there's plenty of opportunities for you to make a profit. So from this perspective, this is a much better product than the previous Meituan Long. Okay, so I hope that after today's session, you please make sure to pay attention to the market price of the DLC, because the price is not something that we can control. To be honest, the only thing issuer can control for the price is, obviously we decide what price to quote, but then we have to follow the formula, right? So what we decide is the issue price of the DLC, and after that we cannot control where the market goes, right? So there must be either direction. The DLC will become cheaper as time goes by. So there will be some DLCs that become very cheap, and this is unavoidable. So this is something that I think we should all pay attention to. Okay, last part of my session, I'll focus on airbag. So this is something that usually I won't spend too much time talking about, but I think what happened 2 weeks ago on the Hong Kong market was just it's just huge, and it actually triggered I think the most airbag events in the whole history of DLC. Okay, DLC doesn't have a very long history. On the SGX, it was introduced in 2017, so up to now it's about 5 years. But still, what happened 2 weeks ago was the most airbag cases in a single day. First of all, what does airbag mean, right? Every DLC there is a daily percentage threshold, so of the underlying. So if the underlying stock goes up or down by more than the airbag threshold, the airbag event will be triggered on that particular DLC. And for example, 5 times Hong Kong stocks all have 15% daily percentage movement threshold, meaning that if you bought a 5 times long DLC on, say, 10 cent, if the 10 cent goes against the direction of your DLC, so if 10 cent goes down instead by more than 15% in a day, then airbag will be triggered on that long DLC. Okay, but if 10 cent goes down, and if what you bought is a short DLC, the short DLC in this case is when 10 cent is down by 50%, your short DLC will be up by around 75% already, and airbag will not be triggered on the short. So if you bet on the correct direction, airbag will not happen to that DLC. It's only when the direction is wrong, it's only when the market is against you, that the airbag will be triggered on that direction of the DLC. Okay, so the threshold for 5 times stocks DLCs is 15%, and the threshold for 7 times index DLC is 10%. Okay, and what happened after airbag is triggered is that okay, let me see. Right, so there will be 15 minutes of an observation period, and then you have to look at if the stock is going down, you have to look at the lowest price of the stock to determine whether the DLC will resume trading. Okay, what happened to the 3 DLCs 2 weeks ago? Alibaba short. There was a huge rebound on the 16th of March. And then actually you can see that at around here, this is around 1:30 in the afternoon. Alibaba was up by 15%. And then airbag was triggered on the short DLC. And then within the 15 minutes, actually the Alibaba kept going up and then was up by more than 20%. 20% is actually what we call total loss percentage for the DLC, because the DLC is 5 times, right? So if the stock goes up or down by 20%, then it's 100% on the DLC already. So in this case, the DLC short is so-called wiped out, and then it entered into what we call permanent suspension stage before it is delisted. Okay, so when will DLC be delisted? It's only when the stock goes against you and more than 20%. Okay, within a very short period of time. Okay, to put it short. Okay, so that's what happened on Alibaba. But in the end, actually, Alibaba was up by 27%. But actually, from this perspective, the short DLC is actually you only lost 100% on the short DLC, and it's not like when you short the stock, you will be required to say a top up margin, or if you bought a CFD short, right? You also be required to top up margin. But in DLC's case, because DLCs is what we call security product, you can only lose 100%. You won't lose more than 100% of what you invested. So in this case, the short DLC actually limit your loss. All right. So this is what happened on Alibaba, and similarly on the Meituan as well. Meituan short is on the same day, pretty much same time, because all these tech stocks usually go in a very similar direction and magnitude, right? So what happened on Meituan short as well. And lastly, for Tencent, the case is that because Tencent didn't go up by more than 20% within the observation period of 15 minutes, so there was residual value in the DLC. And then the DLC was suspended for about half an hour. And then actually after that, it resumed trading, okay, because there was residual value. And this is when airbag can help you reduce your loss, because after the observation period, after the DLC resumes, actually Tencent shot up even more. But in this case, even after the day end, Tencent was up at 23%, but you still have residual value left in the DLC. So this is one of the scenarios where airbag can actually help investors to reduce the loss. Okay. Okay, so I think that's what I want to share with you, and I think I've run out of my time. So for this, I'll leave it to Conor to share with you all his views on the Hong Kong stocks and indices. And okay, maybe just give me about half a minute, because I would like to do a very quick giveaway. And for you to subscribe to our newsletter, you will be entitled to receive a $10 Grab voucher as a token of appreciation. So we will be sending you updates on DLC news, on our new products, on our seminar, webinar programs, or any new features on the website, etc. So you can subscribe to this newsletter. I'll also, if possible, I'll also leave the link in the chat room. So subscribe to it. Even if after the subscription you don't want to receive it anymore, you can always just send us email to unsubscribe it. But as a appreciation, I really would like to. I think it would be great if you can subscribe to the newsletter. Okay, so because I don't have too much time left, I think I will just leave the link in the chat room. Okay, and lastly, if after today's session you still have any questions on DLCs, feel free to call us. This is our toll-free line, and then you can go to our website dlc.ubs.com. Our our toll-free line and also email address are also on our website as well. So remember the website, blc.ubs.com, very easy. And so this will be the end of my session. Thank you. I'll pass the stage back to Conha or Chris. Thank you.
Hi, thanks Alvin for sharing. Let me just put up my PowerPoint. Yep, okay, so let me just do some adjustment here. Got some screen somewhere around. Okay, I just gonna give you a framework of what I'm gonna share for the next perhaps 20 minutes. More of a trick that is not just gonna be helpful for how you're going to trade and manage the DLC, but it could be knowledge for how you can trade and invest in the outright market as well. So very quickly is that the first part I'm going to share for the next 20 minutes will be, was there a selling signal before the war, or was there a selling signal before even January 2022 this year? And I think this year, 2022, started with a very eventful start. I think on the second or third day of the trading days, in fact, maybe on the first day of the trading day in 2022, the US market started to have meltdown. Of course, the US market is still the number one market in the world. And when US markets start to have meltdown, then the rest of the world will also follow as well. So I'm just going to give you, what's that signal? So all these, I think when you trade the DLC product, when you're trading, technical analysis is definitely a must. And I think some of you, if you're with me in the topic, is that I think just not just technical analysis. When we look at technical analysis, we are looking beyond technical analysis, because when we look at TA, we're honestly studying the behavioral science of the market development, the events, the human psychology. So I hope that will give you some light with this 20 minutes short presentation, and also want to offer you some ideas, and it could be some trading techniques you may want to consider them. So the second part, I will look into entry with divergence. What is the entry point? Yeah, so very specifically. And then, of course, I'll end up with, is there an exit point? So since we talk about entry, but will there be an exit strategy, which I'm going to cover that as well. All right, did I miss out something? Yeah, I did miss out something. On disclaimer part is that what presented here is not a recommendation, so please consult your licensed broker. So my mission, our mission, my company mission is to create lateral thinking skill for every investor and traders, knowing when to take a calculated risk with market uncertainty like today, and a bolder risk when opportunity arises. That's where I think DLC comes to play. If you have a bolder risk, means that you're confident in how the market is going to move the next few weeks or next few days. I would like to increase my leverage to about 5 times and 7 times. So I think DLC in the current environment, very uncertain. Definitely, to me, it's a good attributes where the loss is minimized to no margin call. That means whatever you can invest, you set aside, and that's the maximum loss that you're going to suffer. And why we talk about loss, because in trading, loss risk management is part of the deal, which is very important. So I think DLC, in my opinion, being a trader investor is very welcome in this space, and being an educator as well. I strongly advocate when times are getting very uncertain, very uneasy, do look at all this derivative product, because don't shy away from them, because look at it as a hedging instrument, look at it as a trading opportunity instrument. Go and study into it. And especially in the environment in Singapore, they have this SIP program. Later, I'm going to introduce you very shortly. Okay, I'm just going to get into my program very quickly. If not, I'm not going to have time. Now, so was there a selling signal before the war? The answer is, let's study into the bullish divergence. Now, how to apply bullish divergence is that let's look at the Hang Seng China Enterprise Index. And what is this index all about? It is those China company listed in Hong Kong, and not just the ordinary one, but the more prominent one. So we study into the index. The index is also a benchmark that it helps me to also identify the general and main trend of the Hong Kong stock. And for this particular case, it's those China stock listed in Hong Kong. Now, what is bullish divergence? And let me explain to you what is bullish divergence. So mainly, it means that the bullish divergence means that market is still bullish, but there are signs that the market is getting weaker. yeah, this bull is not sustainable. So was there sign at the beginning of the year? The answer is yes. And in fact, end of last year, 18 December, I posted on the social media, my Facebook page. You can like or follow it. Is my name, Con Hao, joined together. So what I posted then was, you still remember the first day of January in US market, it lasted all the way for March, the second week of March. Yeah, there was a meltdown. Okay, so that was even before the war. Now, so I stated there was divergence. So basically divergent, bullish divergent, it means that you could see across Dow Jones, S&P, NASDAQ, Russell, price are still going up, but the MACD I'm using, it doesn't matter whatever indicator you're using. There's a demonstration that as the price go higher, the strength is getting weaker. So that's why I call bullish divergent. I further I explain why it's bullish divergent. In my opinion, is this. I say a divergence is a bull market represents the bull, it is losing its momentum. Now, this does not mean that it is coming down anytime soon. So do look out for triggers. And what are the triggers in 2022? It was the war. So the war was the trigger. So at the point in time in December 18 and after that, I'm very measured. I'm very careful about the bullishness in the US market. So I'm waiting for a trigger. Yeah. So now, so how does it relate to the Hong Kong market or the China market is this? Now, can you spot for the bullish divergence at a point in time? Now, this is a 180 minutes chart. And maybe I task you a few second homework right now. Look out for a bullish divergence in this Hang Seng China Enterprise Index if you can. Okay, so I'm going to review the answer to you very quickly. Now, as the price is moving higher, but the MACD I'm using, so again, if you're using other indicator, that's fine. But you could see that as price move higher, yes, it's bullish, but it does demonstrate to me that this bull is losing its momentum. Yeah, so that's a point of concern. Then the next thing is that you got to be very measured in how we invest. Maybe not fully invest, you got to be very cautious. The next few days, you got to look at the market like hawk, yeah, waiting for the trigger. And when was the trigger? It was the Russian war on the 24th of Feb. And clearly you could see that the market get down and it pushed down. That's for the China market. And definitely for US market, you see all of this, but you also affect the rest of the market throughout the world. Yeah, so now that was a trigger, right? So again, once you see a bullish divergence, be very cautious. Maybe opportunity is around the corner, means that you either cash out or maybe turn short. When I say turn short in today's context, it could be buy short DLC 5 times or 7 times. It's up to you what kind of a risk appetite you have. Now, so that's China Enterprise. And now bear in mind that SGX wanted me to prepare this slide way a bit ahead of time. That was about a month ago. So I forwarded them the slides that, yes, the market still clearly indicated that it's bearish. So if you notice that I prepared this on the 10th of March, right? So the market just stopped there at 7,255. Now, as the time passed, the lowest point went down to about near to 6,000 point for the Hang Seng China Enterprise Index. Now, moving very quickly, is that, so where's the entry point relating to DLC is this. Now, I'm not going to talk about the DLC specific, but how we're going to deploy DLC is that we have to have an understanding of the underlying market. Underlying market means that we have to study into that cash stock itself. We have to study into the index itself. Now, if you are trading the index DLC, so do not study into the DLC contract itself because it's pointless. I think Alvin said that, right? But we have to, I just want to really point the attention to you that focus on the underlying stocks. If you have a view, then you pull out all the instrument that's available, whether it's a single stock futures, DLC, structural warrant. And I think UBS just mentioned, Alvin just mentioned UBS are very, very strong, if not the number one in Hong Kong in the warrants market. So they also want to cross over to do DLC. So whether you're trading a single stock futures, structural warrant, or DLC, focus on the underlying, not the product, not the contract itself. So that's very important point. So where was the trigger at a point in time was this. Now, so we talk about the divergence. And again, just to help to recap, divergence and bullish divergence, what does it mean? meaning that the bull is losing momentum. So the next step is that we look for an entry point, which is a trigger. And we saw that the trigger happened on the 24th of Feb. So it's a big news. Yeah. And the market gap down, it pushed down. Now, then we look at the individual stocks. That very quickly look at individual stocks. So where is the opportunity? So as UBS have currently the listing for all these, you can look at the Hang Seng, Meituan, Tencent, HS, China Enterprise, Alibaba, BYD. Now, I want you to spot for 24th of February. It was here. Now, so among these 6 counters, so which one is the one that you find that is worth shorting? Now, I'm going to tell you the attributes of DLC. Now, if you short and you deploy DLC, you're going to make money for all the 6 contracts. But which one is the best? Yeah, so I'm talking about which one is the best. Now, the attribute for DLC is this. It means that first, you have to be pretty skillful in technical analysis to look at the underlying stocks or index. You have to be quite skillful to do that. Okay. Now, the second one is that you have to understand the characteristic of DLC. What is the attributes? When you deploy the different products, again, the different products could be single stock futures, structural warrant, DLC. But what is the attribute about DLC that means when I study into underlying product? So then on my left side, on my right side, I have all the list of products by different issuers, to be futures, whatever. But how do I choose the different product? Then you have to understand the attributes of DLC. Now, the attribute of DLC is that first, on the underlying, you have to be pretty sharp with your analysis, the timing. Now, second for DLC is that you have to cross over to understand the DLC product. In the event that means if you take care of the first part, that you know that you derive the confidence from your analysis, it's time to enter a short, say for example. But you are confident that the next few days is going to be trendy on the south, trendy on the downtrend. Now, the attribute for DLC is that once you enter, in the hope that market will be trendy. So because once the market be trendy, the fullness of the multiplier effect of 5 times, 7 times, it will bring out in fullness. But if it's not trendy, you will still make money on the right direction. It's just that you can't bring up the fullness. So in a very short while, I'm going to explain to you how it works. Yeah. So just a recap again is that the attribute for DLC, again, you analyze from the underlying, and there's so many product derivative around available in SGX. So which one to choose? Then you have to know the attributes of DLC. The attribute is that once you get in, either a buy view or a short view, the market, hopefully, it will start trending up or down. So when you engage in DLC, then you bring up the fullness of DLC. Now, I'm going to share with you how it works here. Now, let's look at on the left side when the market is trending. Now, day 1, day 2, day 3. Now, on the first column, you could see here is that's the underlying stock. If you can see the underlying stock means that we study into the stock itself or the index itself. So on the right is called the DLC 5 times, where I deploy the DLC 5 times. If I see something BYD, say, for example. Now, day 1, you could see that the market move up by 1%. That's the underlying. But it's a requirement. I'm not too sure if I can use the word requirement by the exchange to the issuer like UBS, that they have to price accordingly. I'm not too sure exactly, is it the right word to use? That one I'll leave to Alvin to justify and clarify later on. Now, if day 1, that the underlying stock move up by 1%, and it is a guideline or maybe a requirement, I do not know, that the DLC have to move up by 5 times. Yeah, so day 1, the underlying stock move up by 1%, then DLC that's quoted, if you buy, say, BYD for 5 times, it have to appreciate by 5%. Now, let's look at day 2. From day 1 to day 2, the underlying appreciate by 2%. Now, you could see that from 101 to 103.2, that's about 2% gain. But if you purchase the DLC 5 times, then the day 1 to day 2, if you notice that 2% on the underlying times 5, then DLC, it has to price it at 10 times. Yeah, so that's how it works. And I think so far, SGX, the partners I'm working with, SGX has been diligent. I believe that they have to assure that the issuer, also not too sure whether I'm saying the right thing, but that's what my observation is, that so far our issuer that we have in the exchange here, I myself an individual investor and trader. So from my own observation, so far all these issuers have lived up to the agreement. That means, is it priced accordingly? They have priced accordingly so far. Okay. Now you could see that the trending market, this is what I mean by trending market. You could see on the left side, the underlying market is basically every day from day 1 to day 3 is trending up, 1% up, 2% up, 1% up. But at the end, if you deploy the DLC 5 times, now look at the net profit, the underlying is just up 4% out of the 3 days. But if you deploy the DLC, means that what is the criteria is that first, you have to be quite good with your technical analysis, means that you are sharp, you are confident at the point of entry. It's not just that. At the point of entry, you believe on this uptrend that it will be trendy. The next 3 days, you'll up, up, up. Then you deploy DLC. That's how it works. That's the real attributes, the true attribute of DLC. Now, let's cross over to the other side here is that what is the market is ranging? It doesn't mean that you'll lose money. It's just that you can't optimize the characteristic, the attribute of DLC. Now, you could see that on the underlying side, day 1, it was up 2%. Day 2, from day 1 to day 2, it was down 4%. So the market second day is just go back down again. Now, on day 3, it went up back up. But you look at the underlying, all in all, it's up 4%. But you look at the DLC in that context, I would not want to explain again the 5 times. But in the same measure, if up by, from 0 day to day 1, up by 2%, it's up by 10. Why? Because it's times 5. Now, from day 1 to day 2, if the underlying is down 4%, so similarly on the downside, it has to up 5 times as well. So it's down 20%. But all in all, if you amalgamate all this loss and gain, DLC at the end of it is still up. It's up 15.5%. So when I say that even you deploy DLC when the market is range, but you're quite right still, the market is up, but it did not carry on the trendy market. You will still make profit. It's just that it did not bring up the fullness of what the contract intended to be, which is 5 times. Yeah. So for 5 times, it could be on the left side of this chart that you can see when market up, the underlying market up by 4 times is times 5. So it's up by 21.3. Okay. So that's the attribute of DLC. And let me just move back to this chart alone. And we could see that what is the trendy market? And look across what else after the war triggered, the market was trendy. The underlying market was trendy. Yes, maybe HS China Enterprise was trendy. But if you look at the Alibaba, is not exactly trendy. After the war, the market kind of stagnated for a while. Then it moved down. So that's not really trendy. Meituan also not very trendy. BYD is pretty trendy, but it ranged for a few days after the war triggered. Then it started to trend down. So I would say that the one that's more trendy is Hang Seng Index and HS China Enterprise. So that's how it works. Now, remember my topic is that spot for bullish divergence. Whenever there's bullish divergence means that you don't short yet, but stand by. Stand by for a trigger. Now, the trigger can be many aspects, can be fundamental news, can be your technical knowledge. It could be something else. So I just want to share with you some hack. It may not be, you don't have to use what I'm using, but I hope that whatever I share, you will be able to add value to whatever you already know. Okay. Now, so, and as an investor and traders, individual investor and traders are always welcome new issuer on board. Why? Because it just gives more offering. Yeah, so it gives us a choice to have more selection. So it's not up yet, but when I go to UBS website, I'm quite delighted to see that there is a lot of other products that will tie to DLC quite soon. I hope it's very soon because the market is, I think the opportunity for 2022 will be great. So once there's more of these product offerings, so you're just going to give us more choices. Yeah. So the other thing about having issuer is that I don't have to worry about whether the contract is illiquid or liquid, because the issuer is that they have to provide both codes. Yeah. So it's my choice that if I select this product, I know that issuer is there to provide both way codes. I will just hit them. So that's how it works. Compared to other listed products, so sometimes they really need the mass market participation. But what if the mass market participation is not in favor of this particular stocks? Then it kind of like you just die of illiquidity. Yeah, so the whole market just go flat. Okay, so in Singapore, I'm not too sure about the rest of the world, but I would say that I'm quite proud being a Singapore educator in investing and trading aspects here. Is that after the Lehman crisis in 2008, I think our regulators take a very serious view whenever we trade all these derivative products, or I will call it specified investment product, including ETF, all this and that. So you have to pass a quiz, a 20 quiz, and I think it's still a 20 quiz. So if you want to, as a Singapore investor, I'm not too sure about overseas investor, if you're listening in, whether you have to pass the SIP quiz or not, I'm not too sure. Yeah, but if you're curious enough to find out, go and visit SGX website. So as long as if you want to deal in all this specific investment product, you have to pass this 20 quiz. And I encourage you to do that if you have not. How would you know whether you can trade DLC or other structured product or derivative in SGX? Is that check with your broker, and the broker able to tell you whether you can start trading them. And this quiz is not difficult to pass. Basically, it's a 20 question. There's unlimited tries until you pass. And before the quiz, you can go through coming close to about 200 slides. And I can tell that these 200 slides, go through them, you will learn a lot. You will enjoy it if you are serious about investing and trading. You will learn a lot. Then you take on this quiz. So don't be stressed that you're not going to pass this quiz. You will pass because it's with unlimited tries. So keep on trying until you pass. Okay? So then you can start to participate in all this specific investment products. So make sure you know what you have before you get started. Okay. So now how about the exit strategy is important. So we talk about on the 24th Feb, we have the confidence to start shorting the market. Then we deploy the various product that is available. Now exit strategy can be the opposite. Now when I say exit, it can be also for entry. It means that when you short, then there must be a point that you buy back, right? But once you buy back, you can also reverse it to go long again. Yeah, that's what I mean. So exit strategy in this demonstration, it can be entry as well. Okay, very quickly, that spot for bearish divergence. So bearish divergence is the reverse of bullish divergence. Okay, so very quickly, I'm going to review the answer to you. Now, if you look at the Hang Seng Index or even the China Enterprise Index on the weekly chart on the 16th of March, that period, the weekly closing, if you go look across, you are able to see very defined hammer, reversing hammer during the weekly chart. So that's one point that market may be reversing. But since I'm on the topic about divergence, I would just want to focus on divergence. Yeah. So remember that we short the market after 24th of Feb. Then when was the time that we should be cautious that maybe it's time to take profit? That's when the reverse happened. Okay. That's why I call it bearish divergence. So bearish divergence means that the market is still going down, but the strength through the indicator is pointing up. So what does it mean? Meaning that this bear market is losing the momentum. Now, bear in mind here, I'm saying that the bear market is losing its momentum, means that whatever is short, maybe it's time for you to take profit. You can take profit or you wait for a trigger. Now, whenever you use divergence, always look for a trigger. You can do it, or you can wait for the trigger to come. Now, when was the trigger that it came for me to reverse my play is when we look at the indicator, it must cross up. Yeah. So when this happened on this day itself, on 16th of March, when the market move up, the indicator naturally cross up. So that's a point that you may consider to take profit and enter to a long DLC, yeah, or long position or whatever. Now, and then it takes about 2 days. Now, remember the attribute for DLC that it must be trendy. Let's say you took profit and you reverse it. The next 2 days, that means in just 2 days, the market go up. This is called the underlying. And notice that because this is a 180 minutes chart, day 1, day 2, the market just trend up. And then if you notice that the market enter into a range. Now, you may consider to continue to hold it, or before enter the range, you can take profit. Because remember what I say about DLC, the attribute is that market has to be trendy. So if the market range you decide to hold, still possible, still can, at the end, you'll still make money, but you're just not going to bring out the fullness of the 5 times attribute. That's what I'm trying to say here. Okay, a very quick, and I hope that is a good, enjoyable education journey for you with this presentation. And now, before you enter into BYD, because earlier the demonstration is a BYD, but if you look at the index itself, the Hang Seng Index or the China Enterprise Index, you're able to see on the weekly chart, they are classic hammer. Okay, this is the point that you have to buy back. Okay, now, but before you trigger, do check with the UBS, their platform. You can try issuer, BYD underlying, all types. In this case, will be long. DLC, and 5 times is 7 times. At the moment, they only offer 5 times, but if they offer 7 times, now between 5 and 7 times, which one should you choose? Very simple. Okay, the confident is that assume that you have confidence that market will turn. Now the next thing is that when should you choose 5 times? When should you choose 7 times? It really depends on how confident you are. The more confident you are, I will go for 7 times. Okay, I'm quite confident. I'll go for 5 times. So that's how it works. Okay. Now, okay, I think I've completed the what I have to share. I think I fully delivered what my intent to give you the trigger, some ideas on the trigger, but I hope that you enjoy it. And it's precious to me because I've been using it all this while for the last maybe 27, 28, or if not 30 years. I know I started investing and trading when I was in my army, when I was serving the nation, when I was 18 years old. Yeah, so today I'm 50 years old. So 50 minus 18. So how long have I been trading? I lost count of years. So trust me, when you cross 40, you don't want to count the number of years anymore. Okay, so on the 6th of April, so SGX invited me to, in fact, I've designed this topic for them for the last few years. It's been running for every quarter, no, every half a year. If you want to understand more about divergence, now this is available free, and do register for this program. I provide a QR code. You can understand more about divergence, how it works. So if you find that you want to continue to follow my insight, yes, every day I will post Insight Market Insight on my Facebook page. Go and look for my name, Kon Hao KON, join together, like or follow it. And this is something that I think it was quite an welcoming post that I have. I have about 43 likes. And what I saw was on 31st of March, I saw that because now there's some debate around the market is that is the US market is going to reverse up and continuous uptrend, or is it the first quarter of 2022, it was done deal where the market start turning down? My view is that we got to be very cautious because I'm seeing divergence, and I hope that you're seeing divergence as well. Since October last year, until since 2021, you could see that there's a strong divergence, bullish divergence that's going on. So I'm very cautious about having a long-term hold position in the US counter. I just want to trade them have a very short-term trading view. And definitely for my long-term position in the US market, I'm extremely cautious right now because my belief, based on this divergent concept, that this rebound since about 16th of March onwards is a retracement for me to cash out and maybe turn short. Okay, this is based on studies. So do dig in if you could. And last of all, I have a YouTube channel as promised that this year I'm going to produce more YouTube video so that the environment will able to enjoy. Go to YouTube, my YouTube channel, Invest and Trade with Insight. You can subscribe to it and hit the bell. So every time I post a new video, you were able to receive it. Okay, I'm going to turn this time that we have, the remaining 7 minutes or 8 minutes that we have to Chris for Q&A segment.
Yeah, thanks, Alvin and Kon Hao. We have received several questions, and I would like to combine some of the questions. Our audience is asking, can you share what is the minimum amount to go into your to go DLC for one counters, and what is the maximum amount that one can win or lose if go either long or short?
I think that's a question for Alvin.
Yeah, sure. Okay, so all the DLCs listed on the SGX at the moment, one bought lot is 100 units, meaning that if the minimum amount for you to enter is let's say if the DLC is at $1, then the minimum amount would be 100. Okay, and some of the I think actually most of the DLCs are actually cheaper than $1. Usually it's around say 20 to 50 cents. Then actually the minimum amount to enter DLC is actually around maybe $20 to $50 only. And in terms of the maximum profit, right, that you can get from DLC, to be honest, if you get the direction correct, there's no limit, because as what I briefly covered in the airbag section, even if the underlying goes say crazily up or down, if you bet the direction correctly, airbag will not be triggered on that DLC. So if you bet on the rebound, and then Tencent rebound 20%, 30%, 40%, you will be able to make that percentage times 5 times on your DLC without anything stopping you. So that's really no cap. But I also really would like to emphasize that I totally agree with Conhao that DLC is a trend trading product. So when you invest in the DLC, you really want to be able to catch the trend. So hopefully, if say the Tencent is up by say a couple of days in a row, then in that case you will be able to get even more than the underlying cumulative return multiplying by the leverage. And in this case, you will be able to get positive compounding effect and actually get more than this return. So we always try to want to catch a trend. And if you say buy a long DLC and then the market goes against you, I think you have to really set a stop loss. And then to stick with your plan, because if you want to hold on to the DLC to hope for the stock to come back, to be honest, very likely, even if the stock comes back, it will be after a while, after the stock fluctuates up and down before it actually comes back, before it finally comes back. And then in that case, the DLC probably will be less than when you invested, because in this case, very likely you get a compounding loss. Yeah.
All right. And our audience is also asking, where can retail investor access the bid-ask spread if we do not have the access to Bloomberg terminals?
Right. Okay. To be honest, I'm from Hong Kong, and I'm not too sure what the broker system in Singapore offer. I think some of them offer real-time bid and offer prices for free. Some of them charge. To be honest, I don't know. Maybe if Connor can help me a bit, but it definitely is. It's not just Bloomberg terminal that gives you a real-time bid and offer. I believe many broker systems out there provide that data, but it may or may not comes with a charge.
Yes, all the brokers in Singapore will provide the bid-ask spread. As you just select the DLC that of your favorite, you're able to see bid-ask spread. If not, you can go to the UBS website. You're able to see the bid-ask spread. It should be live. Yeah, it should be live. So it's free. So even a chart, you can see it. But once again, you don't analyze the chart of a DLC. You analyze the chart from the underlying market. So that's the point that I want to make. Yeah. So all this data are freely available. So not to worry. Yeah.
Thank you, Conor. And if I may, I would add one point is that sometimes, let's say if you have been trading any particular DLC, right? And let's say if you see that the DLC has been at a say 2 to 3 tick spread, let's say, and then if let's say someday you see suddenly it's at a 5 or even 8 tick spread, you can call us anytime, because in this case it probably it may be because of either the market is so choppy or it's because of some settings that the system was triggered. And in this case, call us and then we will be able to tighten it back.
So how can we call you?
Yeah. It's okay. We've got a toll-free line, and I think after today's session, the only thing I want you to remember is our website, dlc.ubs.com. And our line and also our email address are displayed on the very top of the webpage on the landing page.
Okay.
Thank you.
Right. I think that's it. Thanks, Alvin and Konhao. I'm sure everyone, our audience found this very useful. Now, but there's more to come this afternoon. We were talking about crude oil and Singapore's and the portfolio building to technical analysis. And it's time for our quick lunch break now, and we'll see you again at 12:30 p.m.
Thank you, Alvin. Thank you, Chris.
Thank you, Konao. Thank you, Chris.
Thank you, everyone.